Good afternoon, everybody. The time is 1:42 p.m. Pacific Standard Time. The date is 12/19/2018. The Dow Jones is going back into a much deeper bear, and it is. This is a weekly chart, and I'm going to show you the monthly one. The Dow dives 350 points, closes at new lows for the year after the Fed rate hikes, and they did. The S&P 500 also closed at a 2018 low, and it too has gone deeper into the bear market. But let me just tell you something up front. You can get in our free 5-day trial. You're going to be able to do every trade that we do. The trades will be given to you in the option market. And do yourself a favor. We are a market making firm, not your day trading stuff. Now, I think you should get here. So the Dow gave up 381 points and closed at 351 points lower. These major indexes rolled over after Fed Chair Powell said the central bank would continue to shrink its balance sheet, tightening financial conditions. And we'll go over more of that with you when you join us. The Nasdaq Composite fell 2.1% to 6636.83. It on its closing low for 2018. For traders, the Fed statement, Chairman Powell, a subsequent press conference did not suggest that the central bank would slow its pace of rate hikes as quickly as some had hoped. Markets took a leg lower during the Powell. He had his little conference there. The central bank would continue to reduce the size of its balance sheet. So take the liquidity out of the market at $50 billion a month. Donald Trump, your president, he doesn't like that idea. The Fed still sees a solid underpinning for the economy based on the numbers and still sees the variable of 2 rate hikes next year. Now, they didn't want to hear that either. So, once again, this is a weekly chart. That's a 100-week moving average. Now we're even worse and even further in the what? In that bear, I got a monthly chart on that Dow Jones. This thing here has cracked its lid. And I'll tell you why up front. That blue line is a 10-monthly moving average. And we have violated that. That common denominator on this blue line, the 10-month, the Dow's gone straight through it. Even worse, and getting deeper into the bull, is that red line is a 20-month moving average, my friends, and it's breaking below it. The value of that 20-month moving average is 24,045. Now, this is bear market trading. And bear market trading, you can make a lot more money than being in the bull. And why is it? We get those big price swings, and the options pay out big money. And take the time to get with this. Bear market has increased, and on the monthly chart for calendar 2018, this is how it started. That means that these markets are negative for the year. Now, 2019 is even going to get worse, and it will. This is a monthly sell signal. That's how bad that is, right here. Okay, this was the weekly chart at a 100-week moving average, and it's dipping below it. This weekly sell signal is here. Now, we're going to get oversold. When we do get oversold, we trade that bear rally, and we do, and that's coming up off of an oversold condition, and then we get back in again. And we continue to make a market in bear market or bull markets. It doesn't matter. Bear markets pay more money. So that is what we have to tell you about. We're just going to make it sweet and short. This is what happens after a 10-year bull. You got to go back to year 2008. That's the kind of market that we're entering. The stats are showing the same pattern as 2008, which was 10 years ago. And there was a 10-year run, and there was a lot of liquidity by the Fed. Kiss it goodbye. It's over with. All right. I conclude the weekly chart on the Dow, and here's the monthly chart following through the indicators.